Roundtable. And then I will give the about the green finance in China in the past 5 years. Initial framework has been established with 5 pillars. Number 1, green finance criteria, with 3 sets of criteria. First, in 2015, led by the Green Finance Committee of China Society for Finance and Banking, and last led by NDRC, the catalog for green finance. All of these criteria are being revised toward the target of financing carbon neutrality with the proposed the requirements for disclosure with the carbon emissions, and then the green bond issuers requirements, and in the future, more disclosure requirements are being proposed, especially targeting carbon emissions. Now, more specifically about the carbon emissions, more and more financial institutions recognize the need and the necessity of the disclosure of information on the lending credit. They need to report the projects or the lending they have dispersed to the borrowers. The third pillar being the incentives, lending and relending incentives. Meeting different green finance related projects. Be it old or new green finance products and services, we need to focus on the development of carbon footprint related credit and bonds, especially focusing on the achievement of carbon neutrality. And finally, the international cooperation being the 5th pillar. Now, in this respect, a few years back, the G20 framework, the Sustainable Finance Study Group launched by China, with China and the UK being the co-chairs before, promoting the consensus on sustainable or green finance. No continuation until 2019, but this year, since Italy being the chairing nation of G20, relaunching the Sustainable Finance Study Group, co-chaired by China and the US, accepted now by the executive meetings or central bankers and the financial ministers meetings by China and the US, with the consensus achieved. 4 areas will be focused for sustainable finance or green finance consensus. In addition to the platform development, there are other mechanisms, including the central bank and NGFS, including PBOC, with 89 members for the network of green finance, so that the central banks will play a bigger role. And IPSF, launched by the EU and China and other nations. Under this framework, a working group was also established to study green finance and sustainability standards harmonization, co-chaired by the EU and China. In the second half of this year, hopefully, a set of green finance standards, common taxonomy will be launched by this task force to be used by issuers and investors. For instance, Chinese investors or issuers can use this criteria in the EU and vice versa. For instance, the European issuers of hand-up bonds. And lastly, if you recall President Xi Jinping's remarks this morning on the BRI, Belt and Road Initiative, the Green Finance Initiative was first proposed by my society, Green Finance Society, with a number of entities, the two new members, China Re and Swiss Re. These two reinsurance groups make the 38th and the 39th members of our initiative, managing $48 trillion by these 40 members in enhancing green finance and reducing high polluting investments. Now, our roundtable today is on financing carbon neutralities. There are so many sub-subject matters to be talked about. Opportunities and challenges as a result of the carbon neutrality targets. Many specific topics will be discussed. Criteria, cross-border capital flow for the carbon emissions reduction, and the neutralities of financial institutions internally. All these are interesting topics for today's roundtable. We're honored to be joined by a former governor of PBOC and also vice chairman of Boao Forum for Asia, Mr. Zhou Xiaochuan, who will give us a closing remark at the end of the roundtable, and also Governor Yi Gang of PBOC for opening remark, and the governor of Bank of Italy, Visco, as well as other prestigious leaders addressing this issue from different perspectives, specifically on carbon neutrality, with their forward-looking perspectives. The roundtable discussion will be followed. That will be a more casual format. The roundtable will be about 2 hours long. According to the agenda of the roundtable, I'd like to give the floor to Governor Yi Gang of PBOC for opening remarks. Ladies and gentlemen, distinguished guests, good afternoon. It's my pleasure to be here attending EFA's roundtable on financing carbon neutrality through video. My remarks today will cover 3 aspects. Number 1, how to better mobilize funding for green transition, and secondly, how to properly manage climate change-related financial risks, and 3, international cooperation and coordination, especially the important roles of multilateral platforms of G20. Number 1, the mobilization of funding for the sustainable green finance, green economy transition with the right leadership of central government and the state council, the PBOC have been working with the different agencies for the strategy design in the following aspects. Number one, the criteria for green finance. In 2015 and 2018, respectively, PBOC established green bond and green credit criteria, and soon the revised catalogs of green finance bond projects will be concluded, removed with the fossil fuel removed. And secondly, enhanced reporting and disclosure, especially the use and purposes of green credit for green finance in the CIBM. We will further establish an enhanced disclosure system covering all institutions with the consistent standards. And number three, incentives. Green finance, including bonds and credit, are now included in PBOC's qualified collaterals for credit facilities. So with the carbon emissions cut tools, incentivizing more funds channeled to this area, with the credit rating of the commercial lenders and deposit insurance, interest rate, and macro prudential assessment will be used to promote enhanced green finance and emissions cuts. And now we've been working with the EU for common classification criteria for green finance, especially in harmonization of the criteria. By the end of the year, hopefully we'll see a new set of criteria as a reference for international investors. And on the other hand, further open up the Chinese financial industry, facilitating the international participation into the Chinese market with the negative list as well as the expansion of businesses of FIs. We will further open up the capital markets.
Second, we're managing climate-related financial risks. Compared to developed countries, China and other developing countries in Asia are still in this process of industrialization and urbanization. Currently, China has announced its timetable for peaking of the carbon emission to carbon neutrality, which compared to developed countries in Europe and the United States is far shorter. And also we are taking a steeper curve in terms of carbon neutrality, and thereby greater efforts should be made as countermeasures to make proper preparation. And we're also urging earlier transformation of the financial institutions at the level of the central bank. Timely assess climate change impacts on financial stability and fiscal and monetary policy. We're also trying to study in the stress test financial institutions the elements of considering climate change in a systematic way. We're also trying to adapt the allocation of green bond in foreign exchange reserve to control the investment high carbon assessments, high carbon investment, and also incorporates deceptive elements in the framework of risk management. In terms of financial institutions, we are actually urging them to be prepared early on as a way to positively guard against financial climate change. The PBOC has already guided some of the pilot financial institutions to calculate the carbon emission in their projects to see its, say, climate as well as environment-related risks. We also established a nationwide carbon counting system. On a quarterly basis, we are evaluating the green credit situation on commercial banks. At the same time, we're starting the establishment of an appraisal system for financial institutions on the performances in terms of green credit and green loans, as well as green bonds. Currently, there are issues underlying our green financial development. For example, prices of certain assets have not fully exemplified negative externalities in the environment. Because for one reason, some enterprises have not exactly disclosed their environmental information. On the other hand, they have not incorporated the practice of carbon pricing. We hope that financial institutions to actually take an orderly approach in green transition. In the process of transition, safety comes first, and we have to prioritize energy conservation while considering the precondition of the life cycle as lifetime depreciation of the current infrastructure design can accelerate green transition. Third, we should step up international coordination for green development. While the Asian area is actually having consensus on green transitioning, with major economies taking active activities. For example, the Korean government has issued the Green New Policy last year. Governments in Indonesia, Malaysia, Philippines, and Singapore also raised their objectives of carbon emission reduction. Japan is having guidelines on issuing green bonds. Regional level, we're also seeing already progression in our cooperation. With the organization of the East Asian Pacific Central Bank Governors Meeting, different parties are exploring the usage of using Asian bonds fund to invest on local green bonds. And also on the basis of the ASEAN and China-Japan-Korea financial and economic cooperation, we are also establishing the kind of a study program, infrastructure investment that is green and sustainable. Recently, the financial ministers of ASEAN, as well as their central bankers, have established the Asian taxonomy boards. And that decision is in line with establishing a multi-layered green taxonomy system for this particular region. And indeed, we can see that Asian economies has huge demand and great potential in transition. Stepping up international cooperation is definitely good news for fostering the development of green finance in Asia. This, with great urge from Italy, the presiding country of G20 this year, G20 has relaunched the Sustainable Financial Study Group and upgraded that into a working group. From the perspective of PBOC, I think there are two particular items that needs further bolstering. The first is implementation of the green investment principles. At the end of 2018, we proposed the BRI GIP, encouraging financial institutions to really understand the ESG risks, as well as make proper conduct in terms of environmental information disclosure while participating in the BRI developments. Altogether, 39 Chinese international financial institutions are in this agreement to better use green financial tools. PBOC will continue to encourage financial institutions to step up their efforts in BRI-related investments, and requiring them to assess the risks posed on environment and climate with better information disclosure. Second, we should strengthen development of we should strengthen capacity in green development from multiple channels. PBOC will help developing countries to actually build up their capacity in green finance, to support them with greater capacity in actually having their own green transitioning against climate change. We hope that multilateral development institutions will play their strength and know-how to offer capacity building support to developing countries in need in terms of green finance. In general, the financial system is a very positive player in supporting green transitioning and managing the risk of climate change. Asian countries are definitely prioritizing, in a general way, green finance and economic transitioning. Thereby, we can join hands to work with different countries on our exchange and cooperation in green finance so that we contribute to global sustainable development with wisdom from BFA. And in the end, the targets of carbon emission peaking and carbon neutrality will be met. Thank you very much. Thank you, Mr. Yi, for your keynote address. Well, you've noticed that on different publications, Mr. Yi talked about carbon neutrality and green finance. On a personal note, I think Mr. Yi has been playing more emphasis on green finance as well as carbon neutrality based on the number of times that he has talked about this, while we are actually seeing the resolve of the PBOC on trying to foster and reform green finance. At the same time, we're having compulsory and mandatory requirements on information disclosure for financial institutions in green finance, and also incorporates particular factors, climate factors, into our general governance structure. We need to support green finance, especially incentive for low carbon projects. All of these elements are highly innovative, and in the coming time, you're going to be seeing the execution of some of the particular policies. So now I'd like to invite our next speaker, Mr. Ignazio Visco, the governor of Bank of Italy, speaking to us.
For the possibility of joining you in person in Boao. In these remarks, I will discuss the importance of international cooperation in supporting the transition to net carbon neutrality. And I will briefly describe the related activities that we are carrying on within the Group of 20. Climate change and the pandemic are the most important global problems of our times. There is no need to remind this audience that the increasing use of fossil fuels is pushing greenhouse gas concentrations to levels that, unless forceful measures are taken, by the end of the century will lead to a rise in the temperature of the planet that will bring catastrophic consequences for our ecosystems. Many of the root causes of climate change, such as deforestation and the loss of habitat, by raising the chance of contact between people and wildlife, also increase the risk of pandemics. As the United Nations One Health approach recognizes, our health is closely connected to the health of the planet. Climate change is in particular a classic example of a negative externality. Carbon emissions represent a cost that spills over onto other markets besides the one in which they originated. But in this case, as Professor Nordhaus in his Nobel lecture pointed out, externalities are particularly thorny due to their global nature, which puts them outside the domain not only of markets, but also of national governments, just like the pandemics is doing in these days. A close international coordination is therefore needed. We must bear in mind that stopping climate change requires, first of all, a strong and consistent political determination. National governments are the only institutions that can provide incentives to green investments, levy taxes on carbon emissions, and introduce regulations limiting the amount of allowable emissions. But finance can go a long way in helping and reinforcing this process, channeling more resources towards green investments. For these reasons, the finance track of the G20 has put sustainable finance among its top priorities. There is a lot that can and needs to be done. Filling data gaps and improving firms' disclosure is crucial to correctly assess climate-related financial risks and to facilitate their integration in investment strategies. Central banks can cooperate in establishing a common framework to measure climate-related risks and to integrate them in their risk management practices. In this perspective, central banks should also lead by example, by disclosing their climate-related exposure and explaining how they take climate risks into account in their own investment strategies. Reliable scenario analysis is essential. The standardized scenarios prepared by the Network for Greening the Financial System provide a promising common reference framework for the assessment of macro-financial risks related to climate change. National government should then play a decisive role. Besides underlining the importance of carbon pricing schemes, I would reiterate the needs for removing environmental harmful subsidies, thereby promoting a reallocation of capital towards green investment. This year, Italy is not only chairing the G20, but is also partnered with the UK presidency, which is leading the G7, for the next COP26. We are therefore strongly committed in building a consensus among the members of the G20 in order to bring concrete and ambitious results at the COP26, making this year a turning point in the fight against climate change. Within the G20, the Financial Stability Board has been given the task to report on disclosure and data gaps. The IMF has also been asked to consider climate issues in a new data gaps initiative and, together with the OECD, to report on the role of taxation to tackle climate change, which will be discussed during a high-level tax symposium to be held in July. Under our initiative, the G20 has revised the group. We have proposed China and the United States to co-chair this group, and we are very grateful for the decision to accept this responsibility. The group, which is being upgraded to a fully fledged working group, has made rapid progress in the last weeks and is now focusing its work on 3 areas: sustainability reporting, the methods for classifying and verifying investment sustainability, the way to enhance the contribution of international financial institutions to the goals of the Paris Agreement. In the first half of May, the group will organize a G20 Finance Roundtable with the private sector. The purpose of this event will be to offer an in-depth perspective from a range of private sector stakeholders on the agenda for this year and to provide specific suggestions to fit into the G20 roadmap to advance the sustainable finance agenda. This will lead the way towards the Venice Climate Summit, also to be held next July, in which we will explore ways to scale up dedicated finance to support global and consistent policies to pursue a just transition towards carbon neutral economy. Let me conclude by saying that I am grateful for the fact that there has been a large recognition across all countries of the importance of this agenda. The transition to net zero emissions is essential if we want to reduce the risks that climate change poses to the well-being of the present and future generations. By continuing to work together, central banks, supervisory authorities, and the financial sector at large will be able to provide a key contribution to reach our climate goals.
Well, thank you, Governor Isco, in his presentation. He particularly mentioned that as the presidency of the G20, Italy has proposed to relaunch the Sustainable Finance Study Group. A few years back, that study group was upgraded into a working group. And under that mechanism, a few items are to be carried out this year. First is the roadmap for G20 sustainability. Second, information disclosure report system for sustainability, sustainable finance, as well as taxonomy and verification standards for sustainable finance. Okay.
And now, lead speaker session on the agenda now. And first, I'd like to give the floor to Deborah Lear, the Vice Chairman of and Executive Director of Paulson Institute via video.
For inviting the Paulson Institute to be part of this prestigious event on financing carbon neutrality. I'm almost sorry that I can't be with you in person today. This event is being held at a generational moment. We're on the verge of a climate boom driven by many players around this table today. The Chinese government has joined the European Union as a leader on green finance, and we're now seeing others follow: the Middle East, Latin America, Africa, and of course, the United States, to make the transition to carbon neutrality a top priority. We have the opportunity for a green recovery in this post-pandemic world with the right political will. Green finance has moved from a charitable activity into the mainstream for business. Leading investment banks, hedge funds, and other financial institutions around the world have made this transition a priority and are prepared to use the power of their platforms to make it happen. Climate change is now also a business. In addition to the priority that companies are placing on their own transition to net zero, we're seeing investment opportunities on a scale not seen since the technology boom in the 1990s. In China, Goldman Sachs, in a recent study, has estimated that there is a $16 trillion opportunity in environmental goods and services in the market. And by allowing that market to open up, it could create up to 40 million jobs by 2060. China's carbon exchange is another area. When it launches in June with just one industry, it will not only cover around 45% of China's own global carbon emissions, but 14% of global emissions. That is a big idea that can have a big impact, particularly when the other 7 industries join, which could potentially cover up to 30% of global emissions. Lots of opportunity there. But we have to ensure that this carbon business does not turn into a carbon clash. We need to look to create the right framework to allow for competitiveness in climate that benefits all, not to create a climate clash between countries over technology. I'm confident that with the minds around this table today and the discussions that we'll hear, we can start that process. I wish you great success for this forum and discussion, and hope to be able to join you in person next year. Thank you very much.
Thank you, Ms. Deborah Leah. Paulson Institute has been committed to advancing green finance in China in the past few years. On behalf of my organization, I'd like to express my thanks to Paulson Institute and Mr. Deborah Leah. And now I'd like to give the floor to Mr. Ouyang Weiming, President of China Development Bank. Now you have the floor. Distinguished guests, ladies and gentlemen, friends. Carbon neutrality is the necessary path for the world economy. In 2020, global temperature rose or was 1.2 degrees Celsius above the pre-industrial level, wreaking havoc on the productions and life. President Xi Jinping pointed out the Paris Agreement in response to the climate change represents the direction for green finance. For protection of the Mother Earth, China implements its commitment promoting peaking and neutrality, transforming our economies and societies, transitioning toward green finance in development, far-reaching for our industrial structure, production, and lifestyle. Green finance is an important part of peaking and neutrality. Government funds are far from enough. Green projects are generally positive in externalities, but face insufficient capital and cash flows. We need better integration between markets and the government. Synergy in policies is important. At present, China now has in place green finance systems, including criteria, statistics standards, disclosure, and assessment for verification. Next up, we need to improve further the policies in taxation, industries, land, and environment protection. Also important is green finance supply. Incentives and restraint system needs to be reformed and improved for the long cycle green finance projects as a priority for the innovative financial tools and diversified financial products for channeling green finance. Sustainable financing model. Catalyst, the government and different entities can play the role of a catalyst to allocate the resources and transform them into assets with a higher efficiency and better sustainability, as well as lower cost. For instance, the wastewater and the waste solids treatment, water and heat provision, these are the quasi-public good areas with a common contribution by the households, local governments, businesses, government agencies, as well as the general community. The projects can also contribute so that we can achieve balance between market and other entities. Development finance can be an important force. Development is our main goal for paving the way for future development, addressing imbalance in development. For years, China Development Bank has been promoting sustainable development. In China, we financed the high-quality development in the Yellow River Delta and Pearl River Delta development. Green debt outstanding balance exceeded 2.3 trillion RMB, and the cumulative balance achieving 70 billion RMB, with hundreds of green finance-related projects covering 100 local prefectures with 100 billion yuan of credit commitments, covering 1,000 counties in China, or 1 trillion RMB worth of social financing. Internationally, CDB commits to green finance, environmental protection, and sustainable development, with the complete set of rating system in place in terms of ESG impact in areas of infrastructure and industrial cooperation in industries and social livelihood, with $160 billion worth in the Belt and Road Initiative countries. Asia is also one of our priority countries, with outstanding loan exceeding $70 billion. For instance, the Carrot hydraulic station in Pakistan with 320 billion kilowatts of power generation, contributing to the reductions of emissions. Going forward, CDB will continue to work with everybody in contributing to a better world in China, in Asia, and the rest of the world. Thank you so much, President Ouyang. Now, the next speaker is Zhang Wencai from Agricultural Development Bank of China, ADB, Mr. Zhang Wencai, Vice President. Thank you, Mr. Ma Jun. Ladies and gentlemen, dear friends, good afternoon. The pandemic has been hitting the world economy with great cost. This is also an opportunity for us to leverage to promote the transition toward a green finance. The IMF also has promoted the transition. Over 110 economies have made promises of, as well as timetable for net zero. A series of meetings will also be held on climate change. China has been paying a lot of attention to climate change. Will be consistently and actively developing strategies as well as the governance addressing climate change. President Xi Jinping on September 22nd of 2020 at the 75th General Assembly of the United Nations announced the 2030 peak as well as neutrality in 2060 goal, which shows China's determination and commitment to addressing climate change and green finance and green economy. The fifth plenum of Chinese Communist Party also included the peaking and neutrality as part of our 2035 vision. Other documents and policies also include the 30-60 goals. In March, President Xi Jinping at the 9th Financial and Economic Conference pointed out the 30-60 goals is also to be integrated into the civilization and ecosystem development. Agriculture also is affected by the climate change in a big way. Emissions cuts and green development is important. According to President Xi Jinping's ideas, green finance for green development is important, especially in the rural and agricultural development, in balancing the different weaknesses and advantages. A lot of work has been done to achieve peaking and neutrality, and also to establish the brand image of a green bank. In the 6 categories, ADB financed over 360 billion yuan in support of infrastructure upgrades and in the environmental friendly projects over 440 billion yuan. And as of the end of 2020, green credit exceeded 848.4 billion yuan, accounting for 14%. An additional 110.9 billion, making records one after another. As the first development policy bank in China to issue green debt, and first for the Bond Connect, as well as in the Great Bay Area, green finance debt. As end of 2020, the certified green debt issued 72 billion yuan or 500 million euros, altogether 91.2 billion yuan of green debt. We continue to work with the different parties on the green finance, including the Belt and Road Initiative Green Investment Principles.
Establishing a mutually integrated green financial standard, and also work with CBI to together finish the study on the standards and also financial implications of China's agricultural green development. We're also establishing a green bond market, which signs agreements of partnership with Luxembourg Stock Exchange as well as Bond Connect. We continue to work with specific UN agencies, international financial organizations, and lending agencies in overseas markets, governments, as well as financial institutions in China to improve our synergy in green financial services. Next step, ADB will focus on the new stage of green development to practice new mindsets and work for a new with a new pattern, so that around the target of 3020, we find innovative supports for green finance, so that we can indeed be having greater scope of service, with a better managerial system, and now we're becoming a green bank. In the past, we were called a green bank or food bank. Now we're actually a green bank, using our actions to promote China's green development onto a new high, so as to meet the target of carbon emission peaking, carbon neutrality. First of all, we should accelerate the establishment of the green financial management system, as well as green credit policies and standards to make sure that the whole industry can develop in a green way, with a great, say, traction, so as to green this whole process. Second, we should focus on key areas to make sure that we better support green finance, focus on the Yangtze River protection as well as the Yellow River Basin. We service pollution prevention, water sense treatment, ecological conservation and restoration, flood safety, desert management, as well as water and soil conservation. We focus on green development in the countryside and in agriculture, support green production, production of green agri products, green warehousing in logistics, support the supply of major agricultural products. We support water safety in the countryside, as well as pollution in the countryside and overall management of countryside land. So also we're actually mainly looking at the greening of our state-owned land, for example, by supporting carbon credits, as well as the construction of a national reserve forest, ecological forest, as well as a carbon sink forest, so as to build ecological barrier. Also, we are looking at green financial products to better service SMEs, micro enterprises, as well as the countryside and agriculture with different green credit products. We're also looking at the green equity collateral, such as carbon exchange, energy use right, as well as discharge permits, so as to further expand the scope of green finance. Also, we're actually trying to work on new categories, new types of green bonds. If you look at, for example, carbon sink bond, climate bond, blue bonds, so that we can have larger portfolio, and also we're tapping international bond issuing markets so that we are having a larger scale of our bonds AUM. Fifthly, we should step up efforts in management of environmental social risks of investment projects to better define and recognize different types of green loan project, green credit products. We should work with UN, IMF, and lending agencies of international governments, as well as international policy financial institutions, to learn from them their state-of-the-art experiences and best practice in actually using green finance in the countryside and dealing with climate change, so that we can work on joint studies over the targets of the carbon neutrality. Ladies and gentlemen, against climate change, as well as the targets of Paris Agreement and carbon neutrality, we really need the support and efforts made by international community, including financial institutions. We hope that we take this from this opportunity to meet the tide, to ride the tide, so that we can cooperate in greater depth, with greater breadth, so that we make contribution to green and quality development. Okay, now I'd like to invite the next speaker, Marcos from the Development Bank.
I'm very glad to be here. And as it has been clearly argued here today, living up to the objectives of the Paris Agreement and carbon neutrality requires significant capital investment. And these capital investments should be directed to new processes and technologies that enable the decarbonization of high carbon industries, as well as the provision of low carbon alternatives. Achieving carbon neutrality is a multi-fold task. It requires the mutually reinforcing of technology, sustainability, and finance. In this regard, multilateral development banks, such as the NDB, the New Development Bank, are very well suited to contribute to such kinds of tasks. As you all know, the NDB has been set up a few years ago by Brazil, Russia, India, China, and South Africa, some of the world's biggest emerging economies. By the way, the NDB is one of the few multilateral institutions that have sustainable development goals as part of its own constitution, of its own articles of agreement. Multidimensional challenges, as those that relate to carbon neutrality, can be addressed by projects that potentially are multiplied across the BRICS and the emerging world as a result of their positive demonstration effects. For us at the New Development Bank, it's particularly important to pursue following three approaches. First, ensure green at the source. The New Development Bank, along with private sector investors, will help member countries mobilize resources that are necessary for low carbon investment in the coming decades in areas such as renewable energy, green transportation, green buildings, low carbon manufacturing, and forestry. Central in this role, the NDB will contribute to both the reduction of high carbon investment and the massive increase in low carbon and zero carbon investment. The energy sector, for example, investment in new coal-fired power projects should be phased out, while investment targets should be significantly raised for solar and wind power, as well as energy storage technology. Second, helping green transition for legacy projects. The existing portfolio should be gradually brought into alignment with the requirements of the Paris Agreement. The NDB will help mainstream climate adaptation gradually across all of its operations in its member countries, and help them implement and develop stronger nationally determined contributions. For example, the NDB will make financial resources available for energy and industrial companies so that they can adapt to low carbon technologies, and for building owners to retrofit in order to gain higher energy efficiency. And third, help member countries establish enabling institutions for carbon neutrality. In order for all of the objectives that I've mentioned here today to take place effectively, an institution that is conducive to implementation is indispensable. That includes policies, standards, information disclosure, climate risk analysis, incentives mechanism, among other factors. One trait that distinguishes the NDB is the sharing of knowledge. We at our bank also undertake to learn from the best practices and share with our member countries in their quest for carbon neutrality. Finally, Professor Majun, on a broader scope, let me tell you that supporting carbon neutrality should go hand in hand with those training and reskilling programs that will allow workers to play as productive and rewarding a role as possible in the green paradigms of the economy 4.0. Thank you very much.
Thank you very much, President Chojo. As we were speaking, we're actually arranging a conversation between China and Brazil on sustainable farming and green finance. That was coming with the support from President Chojo. And I think next month I'll be hosting that conversation to discuss options of how Chinese green finance capacity can help developing sustainable agriculture in Brazil. Now, let's move on to our next speaker, Mr. Martin Shirk, who is the CEO of International Capital Market Association. Martin, can you hear us?
Very well. Can you hear me?
Yes, please go ahead.
Very good. Well, firstly, it's a pleasure to be one of the speakers at today's roundtable as part of the influential Boao Forum. Thank you very much. What I'd like to speak about, the role of the bond markets in financing the transition to a carbon neutral economy in line with the targets set by many countries and, of course, the goals of the Paris Agreement, and how we at the International Capital Market Association, ICMA, how we are supporting those goals. ICMA is the international trade association for participants in the international bond markets, investors, issuers, intermediaries, and market infrastructures. And we play a role in setting internationally accepted market standards in 4 core areas of the markets: the primary markets, secondary markets, repo and collateral markets, and most relevant to our discussion today, the sustainable bond markets. And clearly, the scale of financing needed to move to a carbon neutral economy is vast. We've all heard the figures, they've been mentioned today again. And the challenges for all of us at global, regional, national, corporate, and individual levels to contribute. And in order to succeed, we need to have a mechanism to mobilize financing from all quarters towards environmental objectives. And here, the capital markets have an immensely important role to fulfill in channeling funds sustainably. Since 2014, acting as the secretariat for a global grouping of near 400 institutions, issuers, investors, intermediaries, NGOs, and service providers, all of them active in the capital markets, ICMA has nurtured the growth of the green, social, and sustainable bond issuance through the creation and development of a series of voluntary principles. And these are the green bond principles, the social bond principles, and the sustainability bond guidelines. And these principles enshrine the concept of use of proceeds, namely that the proceeds of these bonds must be used to finance or refinance projects, assets, or activities which actively contribute to defined environmental or social objectives. The principles also set standards for project selection, for the management of the proceeds, and very importantly, for enhanced disclosure as to how the money will be used to further the environmental and social objectives. And there are also recommendations for external reviews to validate the sustainable credentials of the underlying projects, assets, or activities. I imagine that most people are aware of these. Now, this segment of the market has grown exponentially over the last few years. And when you look at it now, it's almost become a mainstream funding channel. And interestingly, around 95% of the green, social, or sustainability bond issues globally are aligned with ICMA's principles. So in fact, the principles have become the de facto global standard, enhancing market integrity and ensuring that greenwashing is avoided or at least minimized. And as the market becomes even more mainstream and the urgency increases to address the challenges of climate change, green finance has become an overriding policy objective for most countries. As a result of this, we've seen a move towards regulation rather than voluntary standards. And at ICMA, we've been helping many countries design and implement thoughtful and appropriate regulation. Not surprisingly, in most cases, the green bond principles tend to be the foundation on which that regulation is based. Examples would be the ASEAN Green Bond Standards, China's Green Bond Guidelines, and the future EU Green Bond Standard. We're also contributing in many countries to helping create appropriate taxonomies, setting out usable technical standards to define precisely what is deemed to be green and/or sustainable. We're a member of the EU Platform on Sustainable Finance, been working with the ASEAN Capital Markets Forum, and on various working groups in Hong Kong, China, and Russia. This is all work in progress, it's complex, and it differs from region to region depending on the specificities of each economy's reliance on hard-to-abate industries. And over time, we do expect these various taxonomies to continue to converge. So use of proceeds bonds have been a straightforward and robust way to kickstart the sustainable bond markets, but they're only part of the answer. If we're to make meaningful progress along the road to decarbonization, we need to find a capital market mechanism to support, allowing a broader range of entities to participate in the sustainable bond markets, including companies in these hard-to-abate industries. And this is perhaps the major area of interest currently in the sustainable bond markets. And ICMA has contributed to the development of financing a pathway to transition with the publication of sustainability-linked bond principles last June, and then at the end of last year with the publication of the Climate Transition Finance Handbook. Now, the sustainability-linked bond principles give guidance to issuers taking a more holistic view of their sustainability strategy in all areas of their business. They allow companies to set measurable sustainability performance targets using key performance indicators against which they're assessed with the understanding that failure to meet them will result in a meaningful financial penalty. For example, requiring them to pay a higher interest rate to investors. And this is already proving a popular route to transition for companies in a wide range of industry sectors, and it's an equally popular product for investors in the ESG space. Also in 2020, we published the Climate Transition Finance Handbook. This is designed to support the growth of climate transition finance by giving clear guidelines on the disclosures that should be made by issuers on their climate change strategies when they raise funds in debt capital markets using green, social, sustainability, or sustainability-linked bonds in line with the principles. We're very hopeful that new guidance on climate transition will allow a wider range of issuers to participate with credibility and with transparency in the sustainable finance markets and contribute to a faster transformation to the global climate-friendly economy that's so urgently needed. Thank you all for your attention.
Thank you very much, Mark. We agree with you that the sustainable finance standards and disclosure requirements need to converge. In fact, what the G20 is doing is to promote some such convergence. Now,
Now, I'd like to give the floor to the Chief Economist of ICBC, Zhou Yejun. Thank you, Mr. Ma. My remarks is actually originally scheduled to be made by President Liao, but he has a last-minute change in the schedule. Now, carbon neutrality has much to do with the demand side, supply side, production, and life, as well as all areas of the society and economy. It is transformational revolution affecting the future direction as well as sustainability. Financial sector has the capacity and responsibility in playing a role in neutrality. The previous speakers talked about the same thing, despite coming from different institutions, financial institutions especially so. ICBC has been working with global financial institutions in promoting green finance in developing platforms and initiatives with great results. Firstly, green development is increasingly a consensus in the global financial sector. ICBC is now working with many countries' financial institutions in exploring pathways of green development. As pointed out by Mr. Ma, there are many platforms with important roles played by the FIs. For instance, the Global Investors for Sustainable Development, GISD, and the Green Investment Principles of BRI, et cetera, including the Task Force on Climate-Related Financial Disclosures, as well as a Green Finance Roundtable under Belt and Road Initiative. Secondly, carbon neutrality is now incorporated into sustainable finance system. Both China and the EU have written into laws and regulations important part of their strategies, being the green finance into the laws and regulations. ICBC has also been working toward the end of carbon neutrality, promoting the transition, especially from the perspectives of green debt and other financial tools, as well as the structure of finance. Thirdly, ESG, in leading green investments with the ESG asset management accounting for about 1/3 of the total global asset management. The Chinese government encouraged financial institutions to include ESG factors into their credit rating system and risk management processes. So too is ICBC in this process. For instance, we've been working with relevant entities in jointly releasing the CSI 180 ESG index so that we can promote the better performing businesses in ESG. Fourthly, fintech enabling the transition. Typically, fintech is promoting efficiency and innovation. In reality, fintech is also playing a role in green finance. Last year, because of the pandemic, ICBC seized the opportunity of using the online services in bringing down the cost for the services in line with the industry. President Xi Jinping proposed the idea of nature conservancy is the source of great wealth. ICBC is committed to green development, serving our clients across the world with the green finance services so that we can make contribution to sustainability. We have 3 considerations. Number 1, improving the landscape for green finance around the 3060 goals to improve green finance system, including carbon neutrality into the corporate governance system as well as the performance assessment system, etc. In addition to our internal transition, we hope to provide more financing and intellectual support to the transition. Number two, innovation for green finance. It is our hope that new tools, pathways, and channels will be used to promote innovation toward green finance, including big data, Internet of Things, blockchain technologies, so that we can improve our risk management capabilities and capacity in the environment and climate related areas, supporting green finance in products and services. Number three, international cooperation for green finance in environment, climate, resource conservation, high efficiency of utilization, and poverty reduction related areas. The interbank regular cooperation mechanism for Belt and Road Initiative will be better utilized for cooperation across the international financial system for experience sharing and co-financing projects to gain new results. We hope to work with like-minded peers across the world, promote value chain and the supply chain, achieving the goal of neutrality. Thank you. Thank you, Chief Economist Mr. Zhou. And now the last item of our agenda, roundtable discussion with a number of representatives from financial institutions and other organizations. I will not introduce the names. Please limit your intervention into 3 minutes so that we can have more interaction later. Now we have one participant from the video. I'd like to give the floor to Mr. Muhammad Al-Ranzab, President and CEO of HBL Bank.
Thank you, Dr. Majun. I would like to take this opportunity, first of all, for the kind invitation to this August forum, but also our personal thanks to you and to your team in terms of the ongoing guidance that we have received from you and the team, and both for the institution that is HBL and for the country where we are located is Pakistan. Now, simply from a country perspective, as you know, Pakistan is the 5th most vulnerable country to climate change. And of course, our government has taken multi-pronged approach towards negotiating this challenge. It's based on nature-based solutions, including the forestry part in terms of 1 billion plantation target, which is set for June of this year, but also in terms of some of the targets which have been mentioned by other esteemed speakers around 2030. Here in Pakistan, the government has announced that 60% of all energy produced in the country will be clean by the time we get there in about 9 to 10 years. And also that 30% of the country's vehicles will use electricity by 2030. Now, I think it's all fine that the government has made these announcements, but as we are learning, from all the esteemed speakers here, that to make it a real success, it will require an entire ecosystem. I was looking and hearing very attentively to the president of PBOC, and the way he talked about capacity building, incentivization, disclosure policy. And again, Dr. Majun, with your help, we are hoping that here in the country, HBL and the State Bank of Pakistan can work with you and your team in terms of really establishing the green taxonomy framework that we can, use to effectively take this entire agenda forward in Pakistan. Now, HBL, as the largest bank in the country, we are trying to contribute in our small way in this country's journey. So, we've obviously invested in our ESG capacity building with a skilled team, and know Mr. Qasim Dar, who heads up our environment practice here at HBL. But last year, we are the first bank which very publicly announced that we will not do any new financing for coal-based energy projects. While we will grandfather some of the projects in which we have done the financing, but as you can imagine, in an emerging economy in Pakistan, this was a big announcement, but we also had to be sure that we walk the talk, right? So that's an announcement that we've made. We have heard about the green bonds. We are very privileged that we are going to be part of the first or the inaugural green bond that is going to be issued by the largest electric utility in Pakistan. It's going to be a $500 million issue. And we, as HBL, are going to be a co-manager on this issue. So these are all small steps. I would say these are baby steps. We want to learn from you, your team, from China in terms of the best practices. And we look forward to ongoing engagement, Dr. Majun, with you and your team, and indeed with this forum. Thank you.
Thank you very much, President Aurangzeb. I definitely agree with you that taxonomy is the basis for developing a green financial system in the country and also for developing a green business within the bank. Now, let me now give the floor to a few speakers in the room, and then I will come back to Frank if you still wanted to talk a little bit later. 我们现在就开放在
And now the floor is open for discussions. I will not be calling on anyone. Feel free to raise your hands. From Chartered Bank, Madam Zhang. Now about the micro level, our 2030 opportunity report suggests that in the next 10 years, the 3 UN goals will cover about $10 trillion, out of which 1/3 is focused in China. So for financing opportunities, it is tremendous.
Also, I had a question about $50 trillion, namely, we're actually interviewing globally the top 300 investment managers, which together have an AUM of $50 trillion for sustainable financing investment. 81% of the enterprises or asset managers actually said that things are in the pipeline or they are about to kick off. However, only 30% of that assets is actually categorized in this regard in that $50 trillion. 32% are United States, Europe, a bit over 20% present Asia Pacific, while the others radically distributed. While over 50% of those respondents say that China is a priority market. Well, this may not be the ideal situation. For investment managers, they told us that they consider a few factors to accelerate their investment. First is regulatory reform. Second, preferential taxation. Third, greater return. And fourth, measurable statistics. And also we look at retail investors' needs. So this is from the story of the investors. What about the carbon emitting enterprises? In Q1 this year, when it just began, we launched the income report of net zero emission by interviewing 250 multinational corporations, as well as 100 investment managers. To them, the biggest hurdle is still in funding. That's what we're talking about today, how we use investment to help them further. 67% of the respondents thought that funding is the greatest challenge. Among them, especially for some of those brownfield enterprises trying to go green, they're kept in a dilemma, cannot meet each end. So the task for them is particularly challenging. 64% of respondents thought that in terms of, say, net zero emission, it is not viable commercially. Namely, technology currently is too costly. So they're trying to look at affordable technology being one of the pivots. And then we have international standards as well as information disclosure. Also, as you can imagine, after the breakouts of the pandemic, many companies began to look more further at their short-term gains. Thereby, for the mid and longer term, there's still some reservation concerning the whereabouts of their future. So 70% of the respondents said that possibly bigger moves would take place between 2030 and 2050. Namely, in the coming 10 years, things will remain quite steady, no big moves. So that's quite surprising. Only 47% of the respondents said that they fully supported the Paris Agreement, that is less than 2%. And also, the management are actually taking a shorter tenures. They're mainly looking at their shorter gains, shorter returns, which will greatly have an influence on their mid and long-term green development deployments. Concerning the net zero emission of carbon or emission reduction, we're not actually talking a lot about, say, reduction. We're mainly looking at offsetting that. At the same time, people are more interested in the supply chain, but there are not a lot of opportunities for them to focus on in actually greening their supply chain. If we're trying to support enterprises in carbon emission reduction, we really need to understand some of the, say, predicaments they're in. For Standard Chartered, green and sustainable development is one of our top centerpieces in corporate development and strategy. In our company, we have particular departments for green financing, and also for the product end, we have green bonds, sustainable living deposits. We're actually supporting Czech Republic to have a sovereignty blue bond to support sustainable green economy development. In London, we have the world's first ever saving deposits for sustainable developments. So each pound that is being saved is used to invest in emerging market in the sustainable development. On the client end, as early as 2017, Standard Chartered said that it would be stopping its financing support to the coal-fired plants globally, and it would be helping its customers to actually make the transition, the green transition, from, say, coal-firing power production. We're also committing $75 billion, with $40 billion used on sustainable infrastructure development and $35 billion on clean energy development and financing. So from Standard Chartered, our commitment is that in our own operation, we're having zero carbon emission in 2030, and in 2050, our finance activity will have a zero carbon emission. Just now, Professor Ma also talked about the Green GIP, the Green Investment Principle, and Standard Chartered is one of the early signatories. At the same time, we are actually the joint presidents of the Financial Product Innovation Board on the GIP. In 2020, we were in 113 projects of green financing with a total investment volume of over $20 billion. Many of them are in line with the UN SDG goals, such as water treatment, waste treatment. Plus, Bill Winters, the current CEO of Standard Chartered, is actually also the president of a work group of expanding the carbon market involving over 200 emerging market players, which will also have on board companies like ICBC in China and also GD. This is actually helping the private sectors to grow the carbon market so that enterprises can transition to a future of zero carbon emission. Indeed, we have a lot of opportunities. It is a very urgent task. Much has to be done. We hope to work with like-minded colleagues to make our contribution to having a carbon neutral society. Thank you very much. All right, I can invite Mr. Wei being head of China and joint heads of Temasek China. Thank you, Mr. Ma. From the perspective of an investor as well as a financial practitioner, I'd like to talk about three things. All right, the commitment to climate change and sustainability is going to be the business permits. This is a license by an enterprise. China is committing itself to the 30-60 objective, showing its resolution in supporting low carbon development. While many enterprises and investors have actually seen that, the carbon emission cost is going to be getting higher. Opportunities with job for green enterprises are better positioned to receive different resources in support. So more enterprises are setting their own objective of carbon neutrality and carbon emission targets, thereby leaping up to the commitment of sustainable development and carbon neutrality is going to be the business license by enterprises. Second, let's try to see how financial sector can help. With its wide resources and great impact, financial sector is pivotal in supporting sustainable development. More and more financial institutions are now positioning sustainable development at a particular strategic height and practice in the everyday business. Just now, Madame Zhao also mentioned the practice of Standard Charters. It's also seeing global consensus in the financial sector. Many leading financial institutions have their ESG frameworks. The green credit, green bonds markets globally has been expanding at cutthroat speed. Well, thirdly, we're seeing that green finance is one of the key drivers for China's sustainable development. China has a well-established financial system with great strength in R&D and innovation in terms of green bond and green credits. So it is well-positioned and capacitated in terms of developing green finance. China is also having a huge demand for green financial support. According to Mr. Xie Zhonghua, the special envoy of UN Climate Change Commission, research was done by 18 different institutions together with Tsinghua University. And we're actually seeing that altogether we need to have an actual 138 trillion RMB worth of investment in green finance and green development. Well, that's huge demand. While potentially there's also restraints and challenges. Temasek is trying to tap international opportunities to see how we can meet the targets of green development, sustainable development. First, we need to further upgrade and internationalize the green development standards. For example, asset standards in green investments. Also, we're inviting international authoritative certification bodies to have mutual certification recognition with the China-born enterprises, making sure they can be swappable. Also, we're looking at the particular, say, price setting of green products by using the private sector as well as governments research groups. We can empower different market players to have what we call the green bargaining power to reduce the cost in green development. Also, we are offering comprehensive product portfolio to support the markets in on different fronts, so that efficiency in using green finance can be really supported. But one thing, we're supporting ultra-large projects as well as specific projects in the green sector to set yardsticks. At the same time, we're also looking at international funding support and policy funding support, making sure that money is better allocated to the green end. We hope that green finance can be a leverage in carbon neutrality. It will be a great tool guiding real economy so that more money can be channeled to carbon neutrality related sectors, so that we can test the business commercial viability of green economy. Because at the end of the day, for green economy and carbon neutrality is a great, opportunity. It's a great momentum we have to keep track of. Temasek has already committed itself to the 2020 carbon neutrality objective group-wise, and in 2030, we're going to be reducing by half the carbon emission of our investment portfolio, and in 2050, that would be set as zero carbon emission for our whole investment portfolios. That's one of our strategic priorities at Temasek International. So definitely, we're working more on green emission reduction and sustainable development projects in our future roadmap. Thank you. Thank you. That's a very, very well-rounded part. I prepared a few wrap-up notes. However, I don't think these are needed. So now over to you.
Green Growth Institute to say a few words. Frank, please.
Thank you, Professor Ma. Good afternoon from Seoul, Korea, where is the headquarters of GDGI, intergovernmental organization dedicated to the green transformation. We have now 39 members, and we share His Excellency Ban Ki-moon, who is our president of the board, as he is for the Boao Forum. First, can I remind you all that the COVID pandemic is just one symptom of an unprecedented sustainability crisis we face. That includes, of course, climate change, as we are discussing here mostly, but also air pollution, the plastic and oceans crisis, biodiversity crisis, etc. And governments really have mobilized very large amounts of money in stimulus to come back from the economic crisis caused by the pandemic. But we really have to build back much more better than we have seen to date. If the stimulus is following the path that we have seen so far, it risks intensifying the sustainability crisis, as did the stimulus following the financial crisis in 2008, 2009. So governments have the last year announced long-term intent, net zero carbon pledges, but they have only put forward quite limited short-term implementation commitments. And of course, we're hoping that this week the United States will commit to a more ambitious NDC for the Paris Agreement, and many other governments in Asia hopefully will follow suit this year before COP26. But to be able to do so, it is, I think, clear that the private sector in Asia has a huge role to play, but is quite frankly lagging behind private sector counterparts in Europe and North America. We're seeing only limited commitments so far to initiatives like RE100 or similar sustainability initiatives. And where we see companies paying attention to sustainability, it is still too often as a CSR effort rather than as core corporate strategy. However, we do believe that there are many competitive advantages for companies to invest in green growth. And we see many opportunities to invest in green growth that also bring large numbers of green jobs. As just today, the World Resources Institute showed in a very detailed analysis for the United States that renewable energy investments bring many more green jobs, green employment for the US. And we, GDGI, have shown the same for a number of our developing and emerging economies, such as Mexico and Indonesia as well. So for Asian companies, the Asian private sector, we believe there are huge opportunities to invest in renewable energy, in sustainable transport or electric mobility, in energy efficiency, circular economy, and so on. But there are also, of course, threats from the EU carbon border adjustment, or frankly, we see probably even faster carbon becoming a key part of bilateral trade agreements or requirements from customers in value chains, even before there will be a global carbon market through the UNFCCC, as we do believe there will be. So green finance, as discussed here, is growing rapidly in G20 economies, but GDGI also sees other developing and emerging economies very interested in green bond initiatives. We're supporting governments from Mexico to Peru to Vietnam to see first issuance of green bonds, a very strong opportunity for increased financial flows. But as already has been said before, it would be quite important to get international agreement on green taxonomies. So as a final point, can I point out that climate finance can actually complement green finance from the private sector to a greater degree than we have seen so far in Asia. The Green Climate Fund, for instance, is able to provide high-risk funding, including equity and even first loss or guarantees, not just grants or loans. And we believe that that funding from, for instance, the Green Climate Fund can be used effectively to reduce risks for private sector banks or private investors by blending that finance in green investment projects, such as the kind of projects that we originate and develop at GDGI. I thank you for your attention and give it back to you, Professor Ma.
Thank you very much, Frank. 我现在看到
And now, 3 volunteer speakers, Mr. Chen Donghui and Dong Junhui and Yao Jiangtao. Thank you, Professor Ma. Distinguished guests from insurance sector, 2 points to be shared by me. Number 1, from green finance and carbon neutrality, what kind of role and contribution to be made by insurance sector? And secondly, just as mentioned by Dr. Ma, participation in green finance. Many at present are representatives from the financial sector, including commercial banks. How can we participate in this important cause of carbon neutrality? Insurance has a unique role to play. For Swiss Re, we can contribute in 3 aspects. Same with other financial institutions. For our internal operations, we need to aim net zero. By 2030, Swiss Re will achieve a net zero. Number 2, from asset side, how can we make sure we focus on the green assets? We achieved that actually in 2017. Now for the influential businesses, how can we influence their behaviors toward net zero and neutrality? I will not go into details. Now the third pillar would be insurance unique. On the liability side, how can we gradually promote net zero and neutrality? For instance, we will not underwrite the fossil fuel related projects to make the declaration that we're not behind their causes and support the renewable resources development. For instance, new energy vehicles, PV or solar power. Insurance sector is playing an important role, not only by providing guarantee, but also in setting the rules and standards. Otherwise, we will not become underwriter for such projects, so that consensus will be formed. Projects that do not meet our criteria cannot be launched, cannot be sold to the market. That's our unique role of the insurance companies. So that was about the participation. Now about the participation of insurance companies. Now we have the consensus on the asset side. What about the liability side? There's no consensus or understanding at all. How can we minimize the percentage of fossil fuel related projects? We need to do important work, a great deal of work to achieve progress. And secondly, our participation in the green principles. We've been working with ICBC as co-chairs of one of the task groups for assessing the qualifiable measures. For instance, the data related to climate change impact. We're being active in this cause. This is not only a social responsibility, but also a great opportunity for business. That's why we very clear in our position. And lastly, a recommendation, be it a green finance or neutrality, it is recommended, advisable for insurance companies to be part of. Investment, other financial institutions are given more attention, but insurance companies should also give equal attention. Thank you. Thank you. Just as he shared, insurance sector in qualifying risks metrics has unique capacity, especially in their actuarial capabilities and capacities, can provide supplementary contribution in the qualifying the risk management and control. That's why Swiss Re was invited by us to be part of our initiative. Mr. Dong Junfeng, Chairman and President of Net Union Clearing Corporation. Now, Net Union is a new type of financial infrastructure-based company in 2017, launched in 2017 by Governor Zhou on the net-based clearing and settlement with over 2,000 financial institutions connected, handling 1.5 billion transactions daily. We consume a lot of power and electricity in Beijing and Shanghai. Half of our operating cost is payment for electricity. The energy consumption in electricity use is a huge part of resource conservation. How can we minimize the cost of fossil fuel sourced electricity? How can we reduce the transmission for the renewable sourced energy electricity? In the coal-fired power plant transmission, how can we smooth out the fluctuations of electricity provision supply? From the perspective of financial institutions, or specifically a financial infrastructure institution. Now, 2 points. Number one, we handle deluge of transactions, mostly retail and B2C, out of which B is the supply side. Such infrastructure can tackle the data side, work with the vendors in monitoring the footprint of carbon emissions by providing the credit rating data, including the green finance, including debt and credit. And then from the transaction side or trading side, we have in place an interbank network connecting payments and settlements. The carbon trading exchanges can also provide settlement and clearing infrastructure services by linking up all the financial institutions. Lastly, in guiding green consumption spending in lifestyle to stimulate the high carbon enterprises toward the green economy transition. In the Spring Festival last year, the high carbon businesses actually dropped by 40%. But afterwards, it backed the trend by growing 40% afterwards, including the online medical services and education. As a result of a response to the pandemic, green consumption can be guided so that the high carbon businesses can be stimulated, nudged toward the green economy transition. There is also the so-called credit-based guidance for the recycling of waste, classification of waste, for payment and consumption. Some incentives on that end so that the people can be guided toward that direction, as well as raise awareness of a green economy. So that is the supply, asset side, liabilities side, and exchange-based perspectives. 2060 is 40 years away, and the reform was launched 40 years ago. We need to do our part for neutrality. Thank you. Thank you, Mr. Dong. The scenarios you talked about are what the financial institutions are studying, how to incorporate into the financial services scenarios, including identification of the consumption behaviors or spending patterns. How can we enhance such good behaviors? I believe Mr. Chen Jianguang from JD.com might share similar views. And now Yao Jiangtao from Avid Capital, thank you. Distinguished Dr. Ma and Governor, I'm from Avid Capital. My understanding of this subject matter, financing for carbon neutrality, I tackled this from a different perspective. Assets related to carbon can be leveraged to promote voluntary emissions reductions. Now, compulsory versus voluntary. What we've been talking about is a voluntary, compulsory. Voluntary, however, has huge potential, be it the mature market of a green debt or green debt credit or investment in general. Voluntary emissions reduction can play an important role. How can they leverage the carbon-related assets that can play an important role? That's not enough, however. The next step should be leverage the carbon asset to be traded on the market with the collaterals or cashed out with the trading platform to leverage such assets. Compulsory is top down, but voluntary is bottom up. Voluntary reductions include individuals and businesses. With the advances in technology, households, individuals would be willing to play a bigger role. That is a huge market. We should encourage and nurture the development of such market. From the financial sector, we need to play the role of finance by providing trust business services. For instance, the trust account or custodian account to manage the carbon assets, including intermediary services. We should encourage such market development. It can be dynamic with huge potential.
Second, I'd like to give you an update on the capital's practice in green financing. Actually, we have 9 different categories of financial institutions, and in both in terms of investing and financing, they have been playing pivotal roles. Back in 2014, we had the idea of green trust, and then we've also come up with the particular guidelines for green investment and green trust, green insurance, green leasing, green bonds, green asset management products, etc. All these are the prongs that we look at. We are very active purveyor in these regards, but we need to actually have predominance in 4 particular aspects. The first is strategic predominance, namely we have to start by having the right strategy, and second, we have to start by working on research development since it involves all scenarios. Also, we have lead ourselves by practice. We have to look at different business eco cycles and modalities like PV, geothermal, hazardous waste, as well as green power supply, etc. Also, disclosure. Disclosure is something that is actually forcing itself upon us to make sure that we accommodate with these requirements. So these are some of our key takeaways as well as priorities. Also, along the way, we've been trying to use our money to support development of our new energy firm in our group, so that our company is also reducing its emission and better conserve energy. So this is what we have been exploring and experiencing the process of carbon neutrality and development in our company. Thank you, Mr. Yao. We talk about a voluntary emission reduction. Something relevant to that, Marcania has been leading a group of over 40 people to establish what we call rules of voluntary carbon markets. What can this voluntary carbon market do? It can actually help those buyers or sellers for carbon trading quota to exchange in the same platform. So one of those trying to buy carbon emission quotas, for example, like forestry players or some of the, say, new energy areas, new energy sectors who are actually trying to sell those. Usually it's large companies with the objective being pronounced in terms of carbon emission, but willing to buy. Because if they can be the target, they have to buy. They can actually buy the carbon credits. So this is a platform that can be concentration of the both supply and demand sides of carbon trading and carbon emission quotas. So that makes it a market of greater liquidity. In the China region, or say in China at large, we can explore possibility of using this mechanism so that enterprises can better be incentivized to reduce their emission. So how about Mr. Shen Jianguo, Vice President of JD.com and Chief Economist of JD Technology? I think he's going to talk about fintech. I think a lot of us are in the financial sector, and I'm from a technology and internet firm. Since I'm from JD.com, that I'm mainly talking about how technology, the digital technology, is contributing to emission reduction as well as sustainable development. We've been talking about finance as one part of fiscal policies. However, in terms of the industry, from production to logistics, and finally to the knocking at the door on the consumers, we're seeing that in the whole chain, there are various ways for us to reduce energy consumption. Say we're having flexible production so that we're having what we call the push way, the pull way of manufacturing, that is made to order, made to push, so we can reduce the waste in inventory. Second, in terms of the agro products, we're having digital logistics systems so that when you place the order, you can actually have, for example, transports of the agro products, the warehousing, and all of the elements can be fully automated and digitized. We have been using green to really apply to many different facets, including warehousing logistics. As I just said, China has a huge task of arriving at carbon neutrality from the peaking of carbon emission in just 30 years. If you look at our energy mix, last year, China has actually plans the largest amount of installed capacity for coal-fired power plants, which is larger than the combination of that of all the other countries in the world. So that's a huge challenge for us to reach carbon neutrality in just 30 years after we peak in our carbon emission. So that requires the use of digital technology, as well as the support and collaboration of the whole industry chain, making sure that all of them are actually reducing their carbon emission to reach the target. We are seeing some very nice attempts. AI is being used in coal-fired power generation to reduce energy consumption. In logistics and transport, we're also using green technologies. Thereby, in future, when China continues to thrive in digital technology, these technology elements will contribute to the development of industry by trying to achieve the objective of carbon neutrality. Thank you, Dr. Shen. In the interest of time, we can only allow for 1 to 2 opportunities. Mr. Fu Chengang, did you raise your hand? So, all right, we just have 2 final opportunities. Well, I'm actually talking about carbon neutrality on behalf of the, say, number 6 oil producer and also number 8 gas producer in the world. I'm feeling quite humiliated. We have 22 Arab countries. We're in the Middle East. We have the Gulf Cooperation Committee, which has altogether 16 countries. They have great sovereign wealth. They actually have innovative capital allocation, and which are some of their renowned traits in the world. Many of these countries are trying to kind of remove oil and gas. This is not just carbon neutrality. This is about a long-term virtuous strategy of society. Thereby, it's very hard for the Middle East to be an innovation center. However, it is trying to be using sovereign funds, sovereign wealth, as well as investment allocation to really find innovative ways of investing. They have, in these different countries, 15 different national level economic development plans. Half of them are related to the use of system technology like new energy, artificial intelligence, to enable and empower development of relevant sectors and industries in the country. If you look at the top 10 sovereign wealth funds, 4 are actually from Middle East. We have been learning from Mr. Wei Bing, right? Because you're from Temasek, your investment philosophy of GIC. If you look at the present and the future, in terms of the work plan for China's carbon emission reduction as well as carbon neutrality, 3 things should be done. First, we should continue to innovate. We should continue to invest in the innovative pathways of, for example, particular funds so that it can be friendly to carbon neutrality and emission reduction. Then you look at technology startups for PEs as well as, say, sovereign wealth funds. Many will be looking at monetary recycling. And when they're actually trying to get returns on the market, they're always looking at premium grade companies. Second, for the sovereign wealth fund in the Middle East, for long, we're seeing the size scaling up, especially in terms of the allocation secondary markets, including the star boards, the technology startup boards here in China. There are a lot of those enterprises that are in line with the sustainable development principle, sustainable investment principle. I'm sure a lot of these enterprises receive the traction in investment. Thirdly, many countries and many partners are thinking about establishing what we call a particular sustainability fund to follow the track of China's commitment of 2020. In terms of the green BRI investment, we have 3 particular ideas with which we're trying to experiment. The capital market in the Middle East stock exchanges is not very developed. It has liquidity issues. 60% of its wealth is being allocated globally. If there is international exchange in this market, especially one that involves the in-depth participation of China, so is it possible that some of our sustainability featured products can be brought there, denominated in RMB or denominated in the central bank's digital currency? That's what fintech can actually support the development of green BRI investment. Also, we've been talking with Mr. Ma over this issue. If in future in China emerging company, we have a very promising carbon bank, is it possible that funding from Middle East can actually be channeled into that? We can be here as a stakeholder, as a major shareholder, etc. So we are actually making use of your capacity building project, use of money to make sure that the pie can be made bigger. Also here in China, we have the capital markets. There's going to be greater connectivity with global capital markets. We have the stock and bond connect with Hong Kong, etc. In future, we are having connect with London, with the United States, with Qatar, with Doha, with the Gulf countries. If there is that connectivity in our stock exchange, then is it possible that at the very beginning, we can be including the green products such as bonds, securities, derivatives, etc. So any exchange, whether it's traditional or digital or encrypted assets, we can start out by designing it in a green way with greener portfolio. Also, we have the international center, which is offshore design. In terms of the capital openness, in terms of the ease of business index as well as market access, it is actually signaling a future trend. Say, if the international center in this region is not sustainable and not green, then it does not have a future prospects that is rosy. Thereby, from the Abu Dhabi International Center, from that in Qatar, from Dubai, we're actually attempting to look at the things from different perspectives. Say, information disclosure, regulatory supports, the market supervision, market access, etc. We're all preparing for something that is green and sustainable. It's like in the Middle East and all the Gulf nations have been actually placing its future of economic development in a bundling with that of China, in green, in carbon emission reduction, in sustainable development. We're hoping to learn from China in terms of its best practices, both in terms of policy or regulation or global collaboration or many different multinational initiatives. in which China is a leader. Hopefully, we're learning from China's experiences, and we can devote more of our resources, information to help us understand this practice so that in the end, we can have cooperation in what we call a global reaching green governance structure. Thank you very much. Now over to you. And thank you, Mr. Ma, dear delegates. I'd like to very briefly update you on what the China Re has been doing in terms of, say, green financing and also carbon neutrality. For China Re, there are 5 dimensions to this story of carbon neutrality, which we call STIRT. First is standard. Second is technology. Well, for standard, there's a great blue ocean for that. For technology, we're seeing different types of new technologies, such as technology for reducing hydrogen. And then I, for investment, you see green investment, it has been a buzzword for many years. And then mostly for China Re, we look at R, risk, namely, how do we manage risk? Just now, we heard from Mr. Ma, and we've been talking with him quite extensively concerning the risk, physical risk, and also risk in environmental transition. So all these risks are on top of our radar. And then we have D for disclosure. Thereby, we have been working around these 5 dimensions, STR, STERD. And now let me focus on R, of risk. In terms of risk, in China Re, we focus on digitization of risk, namely the bits of risk. How can we actually find a minimal quantifier for that? And then we have been looking at, say, BR, that is the business risk intelligence system, so as to improve the industry's RQ. We have EQ, we have IQ for intelligence, for emotion, right? And now RQ is a new jargon. So that is the risk quotient for enterprise. If it has nice RQ, it can better manage risk. So we are interested in helping our partners to improve their RQ. How can we actually have what we call smart risk management? We have the 4 layers, data layer, big data on risk. China Re has established a tech firm called China Re Risk Management, where I work. And then on top of the data layer, we have risk quants, which is a model of risk, trying to quantify the risks. For example, earthquake risk, typhoon risk, flood risk, as well as the future changes in climates. If we can quantify risks or quantize risks, then we can have what we call portfolio risk analysis, risk portfolio. Because we're putting risks together. Namely, we make sure that we can control and manage all these risks. And the final layer is about thinking far, namely risk insights. So we're trying to offer consultancy and advisory services for customers. So based on this particular mindset, we have been actually offering COP26, a meeting to be held in November this year, our China Re proposal. The first thing is to make the risk visible and then quantifiable, and then manageable and finally foreseeable. Okay, that's all for my part. Thank you, Mr. Wang. Well, in the interest of time, we'll have to put a stop to this. And now, very quickly, I'd like to use 1 or 2 minutes to give you a summary, and then we'll invite Mr. Zhou Xiaochuan to wrap up this whole session. But just now we talked about for 2 hours, focusing on 2 things. First one is policy. Namely, we have the idea from Mr. Yi from PBOC and from the Italian Central Bank. Namely, we're trying to have more institutional support for information disclosure so that financial institutions, in terms of practicing green finance, have a better ecosystem.
Specifically about the role of financial institutions, so what should they do? Number 1, you need to have internal green criteria to differentiate between green and brown, what we call taxonomy. You can develop your own or borrow from others. And there needs to be harmonization or consistent standards in taxonomy. And secondly, greater efforts should be made. Many scenarios are not to be implemented readily. For instance, agriculture, how can you set this criteria to define as green or continually green? the traditional lending criteria cannot apply. Fintech, sensors, AIs, and other new technologies should be applied to promote innovation. Thirdly, better analysis and capabilities should be developed. To insurance companies at present today have the advantage in analytical capabilities to be adopted widely across the entire financial system for the climate-related risks, so that the endogenous capacities can be developed to analyze the climate-related exposures, to better transition toward green investment. Fourthly, policy encouragement and incentives. Just as one of the speakers shared, green investment projects do not yet have a high returns. How can we mobilize funding? Policy banks, for instance, CDB and ADB, are better positioned. In Europe, such projects can generate virtually zero returns. How can we promote China-based and other projects, other areas projects? Fifthly, we have the responsibility in development and strategizing for the achievement of neutrality. The so-called hard-to-abate or high-carbon businesses do not know how to transition. China has a lot of resources. You might be cash rich. You can engage in external consultants. How can we better use technologies to be enabled in the near term to cut their emissions? Otherwise, they have to exit from the market entirely. That was my summary. Now, a warm round of applause to Governor Zhou for the closing remarks, please. Thank you, Dr. Ma. First of all, I must apologize because I was at a meeting. I chaired, actually, the China International Entrepreneurs Roundtable. It was very lively, discussed with the Vice Chairman Wang Qishan providing closing remarks. That's why I missed many of the opening remarks with Governor Yi of PBOC and Governor of Bank of Italy. So I cannot really give a proper closing remarks. So why don't I just share what I want to say here based on my experiences and work recently, specifically on carbon neutrality. I've been asked questions about this subject matter. I never really had the chance to fully talk about this subject matter. When I came in, Mr. Wang was speaking. How can design and validate the carbon trading market? Carbon market, carbon pricing have been much discussed. That is the future for peaking and neutrality. Carbon market, in my mind, is primarily assessed by the fact that if such a market can guide investment, especially in large amount investment into carbon sink and emissions reductions, tremendous investment is necessary for us to realize the goals. Accordingly, such a market can be quite complex to be realized. Now, for financial sector, it has the experience, has what it takes to develop a market such as this. For instance, the design of financial products and financial engineering. That's why they have the resources. That's why I will frame my remarks as the follows. If you can address the following subjects, the carbon market is ill-designed. End of June is expected to see the launch of a carbon market sooner than I expected. But how it was designed, I do not see much detail. What I do know is lack of knowledge leading to the active learning of Forex and other financial markets. And one criterion is inviting as many participants as possible so that the transaction can have a large volume so that pricing can be made. That can be that is ill-advised, misguided. Now, for the quota-based market, that is an auction market more likely. Ill-managed can lead to setbacks. We don't have too much time, as you know. 2030 is only a few years away, and for 2060, carbon neutrality. Now, the criteria. Number one, carbon prices needs to be adequate incentives with a stable carbon prices to guide investment in the future. Some might argue that to address the balance between green and development, maybe we need to give a gradual approach for the carbon quota. The underlying assets cannot be priced immediately, otherwise the economy cannot afford to be priced that way. And secondly, qualifiable metrics. Let's say the peaking is a one threshold. Let's say it's 10.5 billion metric ton. So each year, a quarter of or pointed to 25 million metric tons of carbon to be traded on the market. Now that means market will be prone to fluctuation. Ill-managed, negative price might happen, and that is not a stable mechanism. Fees, as a result, can be made by some speculators, and that is not what we want. To be effective in the mid to long-term incentive with the stable prices. That was the second criterion. And third criterion, quota means there are exceeding the quota and not meeting the quota. So there needs to be some carbon payments. Now, some activities should be allowed to promote carbon sink. And that is not enough because we have such ambitious targets with the trillions of RMB involved. Even when the quota is properly designed, we still need private investments. If the fee is not set properly, there can be loopholes. Maybe the money will be appropriated to other purposes. Otherwise, it will become an economic punishment market. For instance, a citation of a transportation rules that would become a financial punishment, and that is not proper incentive. All in all, the money should be strictly earmarked for green investments and emissions reductions. Investment needs to be stimulated. The reason is, if you look at the trends of the pricing, activities producing emissions are still cheaper in terms of cost, whereas the so-called green productions are still costly. That's why we need some subsidies or compensation mechanism to make up for the higher cost right now in the low carbon activities, to reconcile the interest. There is optimism of decreasing cost of the green energy sources. The reality is far from such a simplicity. I will not go into details today. Thirdly, carbon peaking and neutrality is a process. It takes time. The transitional low carbon activities need to be compensated, but is there an adequate mechanism for incentives and compensation? Just as Dr. Ma said, the carbon sink can absorb some emissions, and that can result in negative carbon emissions in theory. So maybe the extra quota can be given to others. So the quota can be traded on the market, and that is one form of incentives. But better design and thinking is needed. In the transition, however, there are parties who cannot really use this mechanism, but in reality, they cut their emissions. Can we give some compensation to them?
If it's not well designed, then it's not incentivized or compensated. I think that's also something we should be on our radar. In this whole process, we can see that in future we have 40 years to arrive at that objective. In the first 20 years, as long as we can reduce emission, that's good. And in the coming 20 years, it's not just about reducing carbon emission. It's about having zero emission or negative emission to make sure that the target is delivered. In these two different stages, we have to take different approaches. Also, we need to have enough incentives for the first 20 years. And the carbon market, we need to find a solution to address that issue. I'll just give you one example. We know that coal-fired power plant is the largest carbon emitter. If you're burning natural gas, you can reduce carbon emission by 1/3. Say in the first 20 years, we could be burning more natural gas in the place of burning coal to generate power. That can be leading, would that be something that is incentivized and somehow motivated or encouraged? But it's only working for the first 20 years, not the last 20 years. But still, even if that's something, we're seeing that some of the many, say, gas power plants are mainly there because they're trying to kind of balance out the peaks and troughs of power supply. You need to have machines that are actually launched very quickly to very quickly adjust the trough and the peak in power supply. There's some of the, say, gas turbines. If we have the capacity, then in the grid we can have more power generation capacities using PV, using wind power. If there's no capacity of adjusting the peak, if it's intermittent, if it's not steady, then many grids or power companies are not willing to use some of the new energy sources of power generation. We're actually using natural gas to generate power. Will that be compensated or subsidized? Machines are set quite easily. The power tariff is not very high, but it's only for balancing out the peaks. So it's, say, it's kWh that can be kind of produced every year is quite small in number. Thereby, the cost is much higher because it's having a smaller capacity, a larger unit price. It has to be subsidized. Otherwise, companies are not willing to practice that. If you think that a whole grid is like one big company, then that works because it's kind of how you manage the whole company. And now we have individual power companies, and they're separate. You cannot put one's cost onto the other company's profits. Thereby, if you try to incentivize or subsidize, you really need to design products that can help you reduce emission in the first place. May not be having zero emission, however, it is still trying to be working very nicely with the help of subsidy or incentives. Also, we're seeing a lot of solar power generation in housing projects, in residential projects. For example, those PV boards are placed on top of the roof. You can have electricity during the day, but in the evening, you still have to make sure your fan works, your aircon works, your refrigerator works. So where do we have the power? So people are thinking that I can actually generate power. I can send the power to the power company. It's a very complicated process. You have to move from, say, DC to AC using boosters in several rounds so that it can be integrated into the power grid. And then at night, you say that I would like to use the power, so the power grid should send the power back to me. Is it something that is economically wise? I'm not so sure. At least it has technological barriers. And that would mean we need to have a power storage, electricity storage facility. Say at home, you need to have, let's say, particular power storage devices, like, say, like a storage battery cell or battery storage. But it's the storage itself is not absorbing carbon, right? You cannot sell it for quota for carbon emission. At the same time, these, say, storage batteries are quite costly in price. So a lot of people are not willing to think about that in the first place, either for the family or for residential communities or cities. It's not about trying to use these, but to think about how we use that in a more innovative, creative manner. The carbon markets can surely offer incentives and compensations. Yeah, we try not to use the word subsidy, because if you're simply using fiscal mechanism, it's about subsidizing them, but we are trying to see how we can provide them compensations or incentives. The fourth way of evaluating markets is about the mid and long-term technological developments. Say we have a tech project which starts as in conceptualization, and in 2 to 3 years, it is somehow developed and then commercialized, reducing the cost, and in 5 to 7 years, that can be put into mass production. There might be risk along the way for sure. So when it is commercialized in 5 years, it can use a particular equipment to absorb 1 ton of carbon per month, then it's surely something we can go for. What is the incentive? It is actually using the selling price of carbon quota in 5 years as its source of income. It's calculating its ROI to actually draw the attraction, to attract the investors, see whether they are intrigued or not. So what is the carbon price in 5 years? Say that would be the futures price of, say, carbon emission credits. Would that be going up or down? Would that be serialized? What's the risk factor? What's the probability of the risk, etc.? So the market will have to provide something as such, so that a very large cohort of investment, especially in terms of venture capital, can be channeled to emerging technologies based on its future pricing, as well as risk management along the way, which is being used to calculate its risk-based returns. Frankly, 90% of those people who understand, in a real sense, risk management are in the financial sector. So if you're designing these financial markets, you have to make sure that the risks are properly managed. Well, we're also seeing that inside the financial sector, we have different types of jobs. A lot of people are not so sure of what others are doing, seeing some of those jobs are being compartmentalized or partitioned. However, those who are familiar with the trading, design, and application of financial products, especially those who are good at financial engineering, they will think that this is something that I did when I was in my postgrad study. So this is something that I can easily make by using a project. So it's not something that they can do. It's more than just having a design. You have to enunciate on your design. It has to be properly, say, expedited and explained. You need to use a simulation with a result that is convincing, and say this is something that is viable in this market structure. So a model we have to establish for the purpose of simulation. So it's not just about setting up a research design, it's about doing more things. On top of that, if this is something that meets people's requirements, then it is usually something that is being designed on top of the fundamental market in terms of how it functions. If the fundamental framework of the market is poorly designed in a shabby, raw, unstable, and problematic manner, then all those derivatives, namely the more advanced functions that are actually a result of this fundamental framework, will be messy and erroneous. So the fundamental market structure of the carbon markets have to be properly established. Well, aside from these 4 different, say dimensions, I'm thinking that people are very much spurred or driven in engaging in the carbon markets. We're trying to have what we call the nationwide markets. We have local market. However, they have not thought about how these markets are actually to be done. So this is a simple pass and fail test, right? So we have to think about who can successfully design the markets before it is put on the ground. Otherwise, we're just having stories of failure. Now, globally, we're seeing a surge in deficits. And governments at all levels are somehow indebted. We really need to guard against the possibility that the money in the carbon market is misappropriated for other purposes. Otherwise, that will be leading to a greater carbon deficit. In terms of pricing and trading mechanism or derivative functions, the money problem should be properly managed, especially in terms of the purpose of how the money is used. And with that, I think I'm wrapping up here. It's not a wrap up proper for this meeting is just about a continuation of what I was left with in another meeting. I'm hoping that I'm not overusing your time or actually extending the hospitality of the organizer. Thank you. Recently, we've been hearing a lot from Mr. Zhou Xiaoshuai in terms of the carbon market. He has been into this for 10 years. Back in 2004, when I was starting to study green finance, Mr. Zhou told me that you don't just look at green financial tools, such as green credit, green bonds, you should also look at the role of the carbon markets. And after Mr. Zhou retires, I think he has more time to more systematically piece out the structure of the carbon market. He talked about 4 things which are indeed of paramount importance. First and foremost, the carbon market will have to provide the current term, say, incentive for carbon emission, namely for those companies that are trying to reduce carbon emission. We can support them, and also we can inhibit the high carbon emitters. Second, we are actually selling carbon for some profits. You should use the money you proceeds for green purposes instead of high carbon emission purposes. At the same time, transition activities will have to be encouraged. I think these transition activities are those about reducing carbon emission while not in the rank in the rank of zero carbon emission, but to provide them support. And then technological developments will surely have to be supported by carbon market, especially the carbon futures markets. The carbon futures market can provide you a 5 to 10 year curve of changes in the carbon pricing. And that curve can be put inside the model of tech companies or investors who are willing to be looking at the on a 5 to 10 year horizon, see how their return on investment can be calculated. If it is having a very steep curve, then that incentive would be much greater. A lot of PEs and VCs will enter the tech markets with a greater drive. All right, we are seriously running over time. Hereby, I suggest that we put a halt to this. Once again, I'd like to thank Mr. Zhou for your wonderful wrap-up, and also a big tribute to all the speakers here, as well as all our audiences who are following us here, either offline and online. Thanks.